Welcome to the Deep Dive.
Glad to be here.
Today, we're ripping open the latest earnings call transcript from Wix.
Yeah, it just came out, Q1 2025.
Exactly. Our mission here, it's simple. Cut through the noise, pull out the really key stuff.
What mattered most.
Right. What mattered from their Q1 results, their product moves, especially AI, seems like, and what they see for the rest of the year.
Think of it like the cheat sheet for that call.
That's it. A direct line to what Wix is saying about, well, everything right now.
And it wasn't just numbers, right? It gave a really clear view of their strategy.
Yeah, especially that AI angle and how the core business is doing alongside it.
Mm-hmm.
Okay, so let's jump right in. The financials first. How did Q1 look?
Pretty strong start, actually. Total bookings came in at $511 million.
Okay, $511 million. How does that compare?
That's a solid 12% increase year over year, so decent growth there.
And the revenue, did that keep pace?
Revenue did too, yeah. Hit $474 million. That was up 13% year over year. And they actually beat the high end of their own guidance.
Well, always good to see.
Yeah.
What about profitability? Were they, scaling things efficiently?
Looks like it. Non-GAAP operating income saw, significant growth. Big jump.
How big?
Up 44% compared to last year. And as a percent of revenue, that hit 21%.
21% margin. Wow.
Yeah, it really shows that scaling efficiency you mentioned. It's kicking in.
And the cash number, free cash flow, I heard that was pretty big.
It was, yeah. That was a real highlight, I think. Free cash flow was over $142 million just in the quarter.
$142 million.
Yeah. Which is like a major milestone. That works out to 30% of revenue for the quarter.
30% free cash flow margin.
Okay. So very strong cash generation.
All right, those are the kind of the headline numbers. Now let's dig in a bit. What's driving this? Especially on the product side. AI seemed like the really big theme this quarter.
Absolutely. It felt like, less talk and more actual launches this time around, real products.
Okay, let's unpack that then. The biggest splash maybe was Whitzel. What is Whitzel exactly?
So Whitzel is it's a completely new thing, a standalone visual design platform.
Standalone, okay.
Yeah. The idea, as they put it, is to sort of democratize visual design using generative AI.
Ah, like they did with website building originally.
Exactly, that analogy, yeah. So it combines, intuitive tools with what they think are the best AI models for image stuff, editing objects, backgrounds, that kind of thing. It handles all the AI complexity under the hood.
So not just a feature inside Wix then, it's separate. Who's it for?
Correct. Separate for now. Anyway, they're targeting a few groups, existing Wix users, obviously, who need image editing.
Right.
And they threw out a stat. Wix users edited over 40 million images in 2024. So that's a big built-in audience.
Wow. Okay.
Then DeviantArt artists, remember Wix owns DeviantArt.
Oh, right.
And then really anyone who needs digital designs but doesn't have a pro design software background.
Makes sense for existing users.
Yeah.
But bringing in new people, is it meant to be like a new front door to Wix?
That's exactly how they framed it. Yeah, it's still very early days. They stress that, but they see Whitzel as potentially a new funnel, bring in users who maybe don't need a website right away.
Oh, sure.
And they're looking at its own subscription model. Testing pricing, there was a mention of maybe around $79 a year initially.
Okay. And how are they planning to, get it out there? Distribution.
Well, leveraging those existing users, like we said, tapping into partnerships is another big one.
The Microsoft one, that sounded pretty significant.
Right. That was a big announcement. They partnered with Microsoft to integrate Whitzel capabilities directly into Microsoft Copilot.
Oh, wow, into Copilot.
Yeah. So that massively extends its reach right into the Microsoft 365 user base, puts that AI design power in front of, a huge number of people.
That is a huge potential channel. So what makes Whitzel different? There are other design tools, some adding AI too. What's their angle?
They really hammered the AI-first approach. Their argument is, look, traditional drag-and-drop tools, even if they bolt on AI features, weren't fundamentally built for how AI will change visual editing in, say, the next 5 years. They think Whitzel requires, significant shifts in UI, user experience, the tech underneath, compared to those older tools. It's built for AI editing from the ground up, is the claim.
Okay, so Whitzel's the big new standalone thing. But they also put AI inside the main Wix platform too, right? Astro. the assistant.
Yes, Astro, that's embedded right in the Wix dashboard. The goal there is to simplify the whole user journey.
How so?
Well, guiding users through tasks, surfacing the right tools when they need them, helping them actually finish stuff faster.
Right.
They expect it to help with engagement, maybe boost upgrades, reduce churn eventually. And they did say it's just the first of like several AI agents they plan to roll out inside Wix.
Okay, so Whitzel, Astro. Were there other AI tools they talked about?
Yeah, a few more integrated things like AI-powered website automations, some tools for real-time site customization, adaptive content application, and improvements to Wix functions and Wix automations using AI.
It really sounds like AI is just like everywhere now on the platform.
Pretty much.
What about the tech underneath? They mentioned something called the Model Context Protocol, MCP.
Yeah, MCP. That sounds like a pretty important infrastructure piece they rolled out. The Wix Model Context Protocol Server.
Okay, what does it do?
So the basic idea is it lets users use natural language prompts, just talking or typing, to connect Wix's business functions like bookings or payments with other compatible AI tools. It essentially helps enable AI-driven app development on top of the Wix platform.
And they showed an example of this at a Stripe conference, wasn't
That's
it?
exactly right. They demoed using LLMs, large language models, to basically generate the code for a fully working payment solution by talking to this MCP server. Yeah, it shows how AI could potentially interact with, complex services that are built on Wix using their APIs.
Okay, so this connects to their bigger picture view on AI, right? They seem to think it's really going to change how we use the internet.
Yes, management was quite clear on that. They believe a fundamental shift is coming, people interacting more via agents, via LLMs, not just traditional browsing.
And things like MCP are key to that.
That's their view. Protocols like MCP become crucial for those LLMs to actually query and, use complicated web services effectively.
Okay, now here's the really interesting part, I thought. Their take was that all this increasing complexity needing APIs, doing, quote, SEO for LLMs, combined with how fast they're moving, like supporting MCP already, that actually helps a platform like Wix.
Huh.
How does that work?
Yeah, it's a bit counterintuitive, right? But their argument goes like this. Building a basic website, yeah, that's pretty accessible now. But building a really sophisticated, AI-ready online presence, one that can offer services through APIs, one that these new AI agents can actually find and interact with, that gets way harder for an individual or small business to do from scratch.
Okay.
So platforms like Wix, which can handle that complexity, build the infrastructure like MCP, they become even more valuable, even more necessary in this AI world. The complexity, they argue, actually drives users to platforms.
That's a fascinating take. So it's not just features, it's enabling this whole new way of interacting online. Okay, let's pivot a bit. From product to momentum. How did all this translate into user growth, partner growth in Q1?
Well, they reported a, quote, strong and exciting start to 2025 on user growth. Said demand for building online was actually better than they expected in Q1.
Okay, numbers. What did they say about new users?
So the group of users who signed up in Q1 2025, that cohort, they generated $36 million in bookings right off the bat.
$36 million from the new cohort? How's that compare?
That's up 12% compared to what the Q1 2024 cohort spent initially. And that's significant because it's a real acceleration. Post-COVID, new cohort booking growth had been more in the mid-single digits. So 12% is a jump.
A 12% jump in new cohort value year over year. That is notable. What's driving that?
They put it down mostly to just better fundamentals, a bigger cohort. For one, they added nearly 5.3 million new users.
5.3 million. Wow.
Yeah, up 7% year over year. And then the impact of that product innovation, especially, they called out the AI onboarding funnel.
Where was the growth strongest?
Yeah.
Geographically?
They mentioned particularly strong traction in high-spend regions, so the U.S., parts of Europe. And they also made a point of saying they kept getting a high proportion of users with like high-intent people looking to start businesses, commerce-focused users, which is key for monetization down the line.
Right. And speaking of monetization, how did conversion look?
Yeah.
Especially with that new AI onboarding.
Conversion to paid plans was healthy, they said. And they did specifically credit that AI onboarding funnel. Apparently, the large majority of new users are choosing to use the AI website builder first now.
Interesting. And the value per user, ARPS.
That improved too for the new cohort. Higher average revenue per subscription, fueled by people buying more of the higher tier packages, and also strong attachment rates for things like Google Workspace, those business solutions.
Okay, bigger cohort, Spending more. What about the cost to get them? Marketing spend efficiency.
They said acquisition marketing was managed prudently, and they're on track for a time to return on investment TROI of about 4 to 5 months for that Q1 cohort.
4 to 5 months, that good?
Yeah, that's at the lower, faster end of their target range, and it's stable compared to previous years, even with that bigger user base. So they see that as proof of, brand strength and good marketing execution.
Okay, that's new users. What about existing ones? People already on the platform.
Yeah, they showed healthy behavior too. Bookings from existing cohorts grew steadily, stable conversion, strong retention, and ARPS increasing among that base as well. So holding on to and growing value from existing customers.
Good to hear. Now, the partners business, that's become a really big part of Wix, hasn't it? How did the pros do?
Yeah, the partners business seemed to amplify all these positive trends. Professionals, agencies, they're building more sites, attaching more solutions, driving significant payment volume GPV through the more complex projects they handle for clients.
And the revenue growth for partners.
Partners revenue specifically grew a strong 24% year over year.
24%, that's very solid. Was there any slowdown there at all?
They did mention a slight deceleration compared to the previous quarter's growth rate. Not year over year, but quarter over quarter growth rate slowed a bit.
Okay, why was that?
They attributed some of it to FX, foreign exchange headwinds, and also slightly lower than expected GPV growth, specifically from partners in Q1. But they were really clear. They still see partners as a huge, strong growth engine for the business overall. That hasn't changed.
Okay. Looking forward then, are these good trends carrying on into Q2?
Apparently so. They said positive demand has continued through April and into early May. And management made an interesting comment that, their business historically does well when shifting online becomes kind of non-negotiable for businesses, maybe hinting the current environment plays to their strengths.
Right. So how does this strong start, these trends, feed into their outlook for the whole year?
Well, they expect the new cohorts in Q2, Q3, Q4 to stay strong, and that should contribute to top-line growth actually accelerating in the second half of the year.
Okay, acceleration sounds good, but there's always a but.
Yeah, here's the nuance. They're building in, quote, a higher degree of conservatism into their overall expectations for the year.
Even with the strong start and trends continuing, why be more conservative?
It comes down to macro uncertainty. They're particularly cautious about the parts of the business most sensitive to consumer behavior shifts, so commerce, GPV, payment volumes. While the trends look good now, they're basically hedging against potential bumps in the road later in the year.
Okay, that makes sense. On the self-creator side, people building their own sites, what are the growth drivers besides the macro or that new AI funnel?
Well, aside from those external things, they pointed to internal improvements. Continuously making the editor better, simplifying features, making it smoother for users to get from their initial idea to their finished site.
Right, reducing friction.
Exactly. And removing roadblocks around specific business functions people need. They still sound positive about regrowing net subscriptions among self-creators this year.
One last thing on users versus partners. Do they talk about the mix? With partners growing faster, is the balance shifting?
They touched on it. They noted partners seem to adopt new tech, like the AI agents, faster initially, which makes sense. They're pros. But they believe the underlying decision, do I build it myself or hire someone? Those shopping habits, as they put it, stay pretty constant over time. They think there's still plenty of room for agencies, even as AI maybe makes some things easier for DIRs.
Interesting balance. Okay, let's shift gears fully now to the financials and the outlook. Transaction revenue payments, that was up nicely in Q1, right?
Yep. Transaction revenue hit $59 million in Q1. That was up 19% year over year.
19%. What was behind that?
Mostly driven by just more gross payment volume, GTV, flowing through the system, and also an improving take rate as more merchants adopt Wix Payments specifically.
Take rate improving.
Okay, there was also a benefit from adding a new Wix Payments partner last year. They expect transaction revenue growth to kind of track GPV growth more closely going forward now that they're going to lap that partner addition in Q2.
Got it. You mentioned GPV. Anything specific going on there in Q1?
Yeah, there was a slight drag. About a 2-point headwind from winding down a small subsidiary. That's expected to continue, but they said it'll have minimal impact on the top line because those subsidiaries had lower monetization rates anyway. If you strip that out, the core GPV grew a healthy 12% year over year in constant currency.
12% core GPV growth. And partners are a big piece of that.
Huge, over half now. Partners contribute more than 50% of the total GPV running through Wix.
Wow. Okay, back to take rates for a second. You said improving. Where do they see that going long term?
Well, short term, probably somewhat stable as they lap those partnerships, but looking out over multiple years, they see definite opportunity to increase it.
Wow.
By getting more offline businesses using their online tools, like their point of sale solution, by rolling out Wix payments into more countries, and just by adding new features that merchants value and are willing to pay a bit more for.
Okay, let's look at expenses quickly. Gross margin.
Non-GAAP gross margin was 69%, pretty much right where they expected it to be.
And R&D, sales, and marketing. Any shifts there?
Non-GAAP R&D did tick up quarter over quarter to $96 million. That reflects hiring more developers for their 2025 plans, probably needed for Whitzel, Astro, all that AI stuff.
Makes sense.
And non-GAAP sales and marketing also grew quarter over quarter to $112 million. That was them increasing ad spend to capture that strong Q1 demand we talked about.
Right.
But again, they stressed that even with higher spend and a bigger cohort, the TROI stayed stable, so efficient spending.
Okay, let's talk guidance then. What are they actually forecasting for Q2 and the full year 2025?
All right. For Q2 revenue, the range is $485 million to $489 million. That works out to about 11% to 12% year-over-year growth.
Okay, Q2. And the full year. Did they raise it after the strong Q1?
No, they actually maintained their previous guidance for the full year.
Interesting. What is that guidance again?
For bookings, it's $2.025 billion to $2.060 billion. That's targeting 11% to 13% growth. And for revenue, $1.970 billion to $2.000 billion, targeting 12% to 14% growth.
So sticking with the original plan, despite beating Q1 and seeing good trends.
Exactly. That's where that conservatism really shows up. The guidance already factored in or now incorporates, they say, a higher degree of caution because of the macro picture. That caution is maybe offset a bit by FX headwinds easing, but the bottom line is they're sticking to the plan.
Right, factoring in potential volatility even if things look good right now. What about free cash flow for the year? Same story.
Same story. Free cash flow guidance unchanged for 2025. Still targeting $590 million to $610 million.
Which is what percentage of revenue again?
That's aiming for 30% to 31% of revenue as free cash flow for the full year. Still very strong.
They also mentioned being on track for the rule of 45. Can you quickly explain what that is?
Yeah, the rule of 40, or in their case, aiming for 45. It's just a quick check for SaaS companies, basically. You add their revenue growth percentage and their adjusted profit margin percentage, usually EBITDA margin. If that sum is 40 or higher, or 45 in their target, it suggests a healthy balance between growth and profitability. They're saying they're on track to hit that 45 mark this year, assuming they reach the high end of their outlook.
Got it. A measure of efficient growth? Finally, anything on shareholder returns? Buybacks?
Yes. To kind of underline their financial confidence and commitment to returning value, the board authorized another $200 million for share repurchases.
Another $200 million. On top of what they already had.
Yep, brings the total current authorization up to $400 million.
Okay, that's a pretty clear signal about how they view their valuation and cash flow.
Definitely.
So let's try and wrap this deep dive up. What are the main takeaways from the Wix call? Seems like they kicked off 2025 pretty strong.
Yeah, strong start, beat revenue expectations, saw really robust new user momentum, a lot of that driven by product innovation, especially that big AI rollout, Whitzel, Astro, the whole package.
They're seeing good demand continue into Q2, but they're definitely layering in some caution, right?
Yeah.
Balancing the optimism with macro worries.
Exactly. That's why the full year guidance stayed put, despite the Q1 beat. They're maintaining those financial and free cash flow targets, but building in some buffer for uncertainty.
And strategically, they keep hammering home this idea that their platform is becoming like essential infrastructure for small businesses, especially as things get more complex online with AI.
Right. Helping people succeed in this, evolving digital world. And the partner's business just keeps getting stronger and more sophisticated alongside that. That was another clear takeaway.
Plus potential upside over time from things like payment take rates.
Yeah, longer term levers are still there.
So overall, it felt like a company really leaning into AI, both to grab new users with things like Whitzel and just make the core product better, while also, keeping an eye on the bottom line and returning cash to shareholders.
That sums it up pretty well. Financial discipline plus aggressive innovation.
All right, here's something provocative for you, the listener, to think about. As AI agents and tools get smarter and maybe change how we all use the internet, making sophisticated websites potentially more complex to build right. How does Wix balance being cutting edge with being stable and easy enough for everyone?
Yeah, it's a real tightrope walk, isn't it?
Does that rising complexity ultimately push more people onto platforms like Wix, like they argue?
Yeah.
Or does natural language AI eventually get so good that people can just bypass traditional website builders entirely? Something to chew on.
Definitely something to watch. Now, just a reminder for everyone listening.
Yes, the important part.
This discussion was based purely on the earnings call content we reviewed. It's for informational purposes only. It's absolutely not investment advice.
Investing has risks, significant risks.
Always. So please, do your own thorough research. Talk to a qualified financial advisor before making any investment decisions based on this or anything else you hear.
Couldn't agree more. Thanks for joining us for this deep dive.
Until next time.